Hello friends, this is Jitendra Kumar Bhagwatra. Welcome you all to your channel, the UTKAL Investor. Gold's current rally isn't showing any signs of slowing down. The yellow metal, which set its highs in 2011, has crossed it recently in dollar terms. Investment demand has been severe and holdings in gold-backed ETF have beaten all-time highs. Gold always shines during economic crisis. Let it be the 2001 crisis, the 2011 Euro crisis, the 2008 global financial crisis, or the current pandemic, the COVID-19 crisis. If we move back to history, gold was used as an uniform currency. As printed currency came into the picture, there was a rule that a country can print only that much value of currency equal to the value of its gold treasury. But now, no country follows the gold standard. Country can print unlimited currency. This has increased the risk of inflation. Even if there is a chance of hyperinflation or stagflation. In such a situation, you have to buy the same amount of goods and services with higher amount of currency, which you are able to buy now with a lower amount of currency. In such a situation, the value of gold doesn't fall, it spikes higher. Therefore, at least 10% of your investment should be in gold. It's a good hedging instrument, considered a safe haven, and your best friend during a crisis. In spite of marriages being on hold in India, prices of gold is rallying. Most of the marriages, especially among the rich class, is being shifted to 2021. Which will give gold a further reason to rally. Towards the end of this calendar year and in 2021, there will be a lot of happening in the global financial markets on the downside. This will again give gold a lot of room to rally. Central banks around the globe are on a gold buying spree, and they know very well that there is a crisis, and this crisis is going to deepen before fading out. Interest rates in India or abroad are not going to rise anytime soon. This will prompt investors for a better parking of their money, and gold would take a lion's share of their search. Short-term fluctuations in gold prices may come, but in the longer term, the trend is clearly upwards. In the year 2000, gold prices were at 4,400, which has crossed 50,000 recently. A fabulous return. But in a longer period, the return has been around 9% to 10%. The return very much depends upon the time period we take for comparison. But the record says that it has always been able to beat inflation. As for the current global scenario, I won't be surprised if within the next 18 to 24 months, gold crosses a price of 80,000 to 1 lakh rupees. So now the question is, how should you invest? Should you invest in the form of jewelry? No. Because jewelry is for consumption, not for investment. Apart, there is a risk of storage, impurity, taxes and making charges. There are various other forms available, like the digital gold. Second is the physical gold in the form of bullion or coins. Then comes the ETFs, government sovereign gold bonds. But the most convenient form according to me is a gold mutual fund SIP. But still, you can choose from all these 5 options according to your convenience. So, happy investing and golden returns. Those of you who haven't subscribed to the channel yet, please consider subscribing it. And please share the videos with your friends and relatives, to whomsoever you think it would be helpful. So see you in the next video. Till then, bye bye and take care.